Friends, I would like to discuss here about the taxation and the financial systems that prevail in our country as a common man without criticizing the policy or performance of any party or government. At the end, I have also made some suggestions about changing of the present tax structure, in particular the income tax. So please watch this till the end and pass on your remarks. See, we are living in a society where we are closely encircled, we are tied up by taxes on one side and a very lengthy, costly and time-consuming procedures on the other hand. So there is not one tax but many taxes like the GST, income tax, corporate tax, the excise duty, customs duty, road tax, toll, property tax, the securities transaction tax and so on. The list is very big. So in this scenario, the people are always under the fear of heavy taxation and they are rather reluctant to put their foot forward towards the progress and growth. They cannot venture into the entrepreneurship more because of the legal and financial problems requiring a payment of heavy tax, license fee, registration charges, etc. and also because of the time-consuming process. Let me now focus on the direct taxes, the income tax and the corporation tax, in particularly income tax, which is a more concerning factor for the ordinary citizens with lower incomes. See, the income tax department, it functions under the Department of Revenue, Ministry of Finance. It is headed by the apex body, namely the Central Board of Direct Taxes, the CBDT, and it is directed towards the enforcement of the direct tax laws like the Income Tax Act 1961 and other economic laws such as the Benami Transactions Prohibition Act 1988, the Black Money Act 2015, etc. And its aim is to collect the revenue for the Government of India. It has a wide scope and powers to levy the tax on the income of individuals, firms, companies, the local authorities, societies, NGOs, and also on the international businesses. And it also deals with the double taxation avoidance agreements, various aspects of the international taxation such as the transfer pricing, combating the tax evasion, tax avoidance practices, etc. See, during 19th century, that is during British rule in India, the British government faced an acute financial crisis. So to fill up the treasury, the first Income Tax Act was introduced in February 1860 by the British. And it was divided into 21 parts with 259 sections and so on. And the income was also classified under 4 schedules: the income from landed property, income from professions and trade, income from securities, annuities and dividends, and income from salaries and pensions. And the agricultural income was also subject to tax. See, subsequently this was slightly streamlined in 1922 and it became the Income Tax Act of 1922. And here a provision was made to decide about the tax rates every year in the annual finance acts. That is, as prescribed in the annual budgets instead of putting it in the basic enactment. So this 1922 Act was also amended several times, especially after 1939. And a tax on capital gains, it was imposed in 1946. There was also the enactment of several other tax acts like the Wealth Tax Act 1957, the Expenditure Tax Act 1957, the Gift Tax Act 1958, etc. 1922 Income Tax Act, It remained in operation for almost 40 years, and with some minor changes it became the Income Tax Act 1961, and it came into force with effect from 1st April 1962. See, today we are governed by the Income Tax Act 1961. This again has got 298 sections and 4 schedules as it was, and it is applicable to whole of India, including the state of Jammu and Kashmir. So even after a lapse of 160 years almost, we are following more or less the same set of rules with some minor changes here and there. See, administration in the Income Tax Department is headed by the statutory body, namely the CBDT at the apex level, and its territory-based regional headquarters at the field office level. And besides these, there are about 10 specialist directorates, like the Directorate of Investigation within the Income Tax Department. This is about the IT Department's administration. See, the CBDT, it provides inputs for the policy and planning of the direct taxes. Then the corporate tax, it's a direct tax imposed by the government on the income or the profits earned by a corporation. That is, the business entities, including both the domestic and the multinational companies. Whereas individual income tax, it is levied on the personal earnings. See, when the Income Tax Department requires clarifications or the supporting documents on the return filed by the taxpayer is served a notice under subsection 2 of section 143 of the Income Tax Act 1961. Similarly, when the IT department requires clarification from the taxpayer on certain issues for a better assessment of the income of the taxpayer, they can serve a notice under section 142 of the IT Act. Penalties, they are levied for the non-compliance of the notices of the assessing officer, and any willful evasion of tax, it is considered as a criminal offence resulting in the prosecution. See, while a penalty is only monetary in nature, a prosecution involves the imprisonment also. See, the department can survey any business premises for the physical verification of the records and other valuables under section 133. The department can search the residential and the business premises of any taxpayer to check the records and valuables to ensure that no evasion of tax is taking place under section 132. They can also seize the records during the raids, and we hear about many such income tax raids happening almost every day across the country. But the final result of such raid, in most of the cases, it is still a big question mark. See, only around 7% of the population file the ITRs. That is around 9 crore people. And in that around 4 to 4.5 crore cases, the income reported is only in the range of around 2.5 to 5 crores. So about 46,000 employees work for the IT department, if my figure is correct. And the government proposes around 1.87 crore this time for the tax administration in the current budget. Of course, this is for all the taxes together. And most of these provisions of the Act we have taken from outside. The influence of the British still persists. So instead of condensing and making it simpler, we are expanding and making them more and more complicated. And these acts or rules, they cannot be understood by a common man. whether it is Income Tax Act or Indian Contracts Act, the criminal law, the IPC code, the excise duty provisions, the GST rules, FEMA, FERA, the civil code procedures, or whichever act or rules or law book it is, it requires a very deep study, specialization and experience to understand and execute. See, no law is simple in India. Every law, it runs into hundreds of pages with so many contractual and financial and legal terms and conditions, making it highly difficult for a common man to understand, and thereby leading to the emergence of so many advisors and consultants. See, there should be no hidden agendas. Statements should be clear, straightforward, and unambiguous. See, one place in the IT rules you say no tax up to rupees 12 lakhs. Go further, you say amount exceeding 12 lakhs, you have to pay tax for all the tax exceeding 3 lakhs. One place you say the interest on PF qualifies for IT exemption. Again, you subject this to a condition that it should not exceed certain limit. You confuse people with different tax slabs for the same income, old regime, new regime, etc. And many words like the gross income, total income, net income, taxable income, income after chapter 6A deductions, etc., etc. So you are bound to be confused. The terms and conditions are more than the original clauses in the Act. See, the slogan of the government that levying of taxes is to build a nation, build the infrastructure, to create the welfare fund and so on. It is true, it is very much true, but the real truth is that the government is doing all this more at the cost of a poor man's earnings, thereby making him much poorer and more unsecured. The simplification of the ITR forms like the Saral, Sahaj, Sugan, e-verification, that is the use of Aadhaar card or the bank account to ensure the verification of the ITR by taxpayers, dispensing with the hassle of sending the hard copy of the ITR form to the CPC centers, etc., etc., are no doubt some of the simplifications they have made. And this has become very handy and easy to the cost accountants, chartered accountants, tax consultants, etc., who may already have some basic knowledge on this subject. But still it has not come to the level of a common man. And it becomes very, very difficult even today, not only for the citizens to understand, but also for the elected members of the legislature, the parliament, who have to approve them. So this is the status of our general legal framework of all our acts and rules. See, in fact, the thumb rule that you should follow is that the set of rules, whatever is the subject, should not exceed, say, about 100 or 200 pages. If the intention of the finance ministry is to make the statements straightforward, without hidden agendas, using simple words and simple language without confusing the public, without using confusing words carrying dual meanings, without a repetition, without beating over the bush, without creating much ado, we can all compress this. We can all avoid the jugglery of words, and we can reduce it to the barest minimum in a way that any sharp matriculate can also understand without needing the help of the consultants, advocates and advisors to interpret them. See, going by a few previous budget estimates of the government of India, we come to know that it requires around 45 to 50 lakh per year, 50 lakh rupees per year to meet its expenditure. For 2025-26, it has projected 50.65 lakh crores towards the expenditure for the year. That is for its governance or say for its sustenance. This money government is not able to generate in full through its commercial enterprises, through its financial institutions, through the banking sector or railways or P&T or public sector undertakings, etc. Which is again because of the poor governance and lack of accountability. Therefore, they want to borrow heavy sums from both the national and the international financial institutions, and the balance they want to mobilize by taxing the citizens, manufacturers, vendors, the corporates, etc. So this statement is true. This statement is true for even the state governments and the local bodies also. See, in our current yearly budget of 50.65 lakh crores, 12.76 lakh crores, that is 25% of our budget, will go towards the interest payment on borrowings. So this shows the size of the government's borrowings. The cumulative debt is around 185.11 lakh crores as of March 2025, and it is going to be around 200.16 lakh crores as of March 2026. That is after adjusting the cash balances, so which is roughly around 54-55% of our GDP. So this includes both the internal and the external debts. But luckily, 97% of our borrowings, Government of India's borrowings as of today, are all internal borrowings. So debt-wise, still India is far better compared to United States and other advanced countries, because US in 2025, as of 2025 end, it has got $36.22 trillion debt. So coming to the receipts portion of the budget, the gross tax receipts estimated, it is around 42 lakh crores, 42.70 lakh crores. So in this, income tax is around 14 lakh, GST around 12 lakh crores, the corporation tax around 11 lakh crores, and the others. But the government has to transfer the share of the states. The states share again, it is estimated to be 14.22 lakh crore, which is almost one third of this amount. And we will be left with, the Government of India will be left with 28.38 lakh crores. And the non-tax revenue expected is around 5.83 lakh crores. The non-debt capital revenue around 0.76 lakh crores, etc. So, the total net receipt is only with all this, the estimated net receipt, again these are the estimates only. It is around 34.96 lakh crores against 50.65 lakh crores what you require for expenditure. So for the balance of 15.69 lakh crores, the government wants to go for borrowings. In this, the government proposes around 14.82 lakh crores market loans, and the balance, small balance of 0.87 lakh crores is, from the securities against the small savings or external loans and so on. So when I say the market borrowings, which the government is proposing to the tune of some 14.82 lakh crores, it represents the internal debts. It includes the loans raised in the open market, the bonds, treasury bills issued to the state governments, commercial banks, and other investors. The non-interest bearing rupee securities issued to international financial institutions. The securities issued to the Industrial Development Bank of India, IDB, the national banks, the Food Corporation of India, oil marketing companies, the fertilizer companies, and also the provident fund balances of the employees and the public held by the government of India. See, every country, it has its own unique characteristics and the regional strengths that contribute to its overall economic growth. The economy of India, it is a developing mixed economy, and the GDP, what you call the gross domestic product, it refers to the monetary value of all goods and services produced in a nation during a given year or say given period. So a higher GDP indicates the country's national income, the financial strength of the nation, while GDP per capita, it refers to the financial strength of the individuals. See, India is the fifth largest economy globally with a nominal GDP of $4,340 billion. That is $4.34 trillion in 2025. And it amounts to around 373 lakh crore rupees at rupee 86 per dollar. Whereas the nominal GDP of USA, which ranks first globally, it is around 30.33 trillions. And China number 2 by GDP nominal, it is around $19 trillion. So the gap is very wide. So USA's GDP is $33.33 trillion. So the gap is again between 4.33 trillion and 33.33 trillion. So it's a very wide gap, although we are fourth or fifth. The nominal GDP, when I say, it means the GDP before adjusting the inflation. And when I say real GDP, it is after adjusting the inflation. Similarly, in the PPP system, the cost of living of the countries, they are also adjusted before comparing. On a per capita income basis, India ranks 140th by GDP nominal with around rupees 2.66 lakh rupees per annum. So this has to be increased drastically by reducing taxes and increasing the earning opportunities of the people. Then only people can lead a happy life, a comfortable life. There has to be, now my suggestion is purely my suggestion, and you are also free to give your comments. There has to be only one tax and not 12 taxes. There has to be a strict implementation of the tax collection procedures. Otherwise, there has to be heavy penalties. Tax should be collected only at the stage of spending, whether it is for procurement of items or services or property, and not on what you earn. Also, not on the accrued income, not on what you manufacture and ship to stores even before it is sold. The money that I earn, it is for spending, whether it is today or this week or this month or next month, next year, this year, or after a few years, either by me or by my successors. And similarly, every employer has to pay this tax at every stage of spending, including wages, which an employer may pay to his employees, and it is not on their earnings. It should not be on their earnings. Similarly, for the enterprises, the tax should not be on the net income after setting off your expenditure as it stands now, which paves the way for a lot of manipulation. I am not bothered about how much income you make, but taxes should be on all your expenditure items, including the salaries you pay to your employees, at least in the private sector. But rates have to be nominal. You can decide what the rate should be. So by following this, you will have an additional tax of not less than at least 10 lakh crores in the area of the corporation tax itself, or even it may be more, because the salaries portion is a substantial portion in any medium level enterprise. And considering your salary, DA, HRA, your wages, honorarium, fee, bonus, etc. as income for the tax purposes is not at all fair. It is not correct. Although you have defined these things for your convenience as income in the Income Tax Act, legally speaking, it is not the income. It is earned by spending your time, energy and services for the office. It is not a strange receipt like your income from lottery, income from race or puzzle games, etc. To work for an office, you spend money towards the rent, towards transport, medical, food, clothing and so on. Ultimately, what you are left with at the end of the month, it may be nil, or it may be even it may run into loss or a negative figure which you may like to borrow from others. So, I suggest that what you should pay is a tax on what you spend and not on what you earn. Earning is, after all, for spending. Savings in our account is for future spending. This is the logic, and it is true for all the incomes. It may be income on FD's interest, FDs, by way of interest. It may be rental income, income from other sources, or even income from your house property, etc., etc. So first stage, tax is to be paid by those who pay money into my account. Then it is tax for me as and when I spend. The same principle for manufacturing activities, imports, exports, etc., etc. So going by our present GDP, the per capita income and spending pattern, government by this single tax alone can make around 30 lakh crores net from all domains together, although your personal income tax becomes nil. So all activities are to be brought within the concept of GST. So it can be GST or on the principles of, based on the principles of GST, or you call it as government tax, whatever it is. Black money, which forms a substantial portion of the money in circulation, over and above the officially declared GDP, it should also flow into this tax domain. So what we say, for example, when a salary is paid by the employer to his employees, say 1 crore per month, then tax at 5% or whatever is the percentage it is for you to sit and decide. Then assuming it is 5%, 5% the employer has to pay, that is 5 lakh rupees to the government, and the employees will pay at different stages of spending, only at the stage of spending over the course of time. So they also pay tax in different multiples and different intervals of time. You make all payments digital, whether it is rupee 1 or 1 crore, no cash transaction at all, or it can be cash for only for dealing with the non-tax items. Then which of the non-tax items that you propose to? Only essential grocery items, the vegetables, fruits, especially the medicines, and the hospital charges, the school fee, fertilizers, textbooks, and things like that only should be exempt from tax. So all other items should come under the tax bracket. Categorize these items and the services into some 3 or 4 slabs. 5% category, 10% category, 20% category, 30% category, like that. Items like liquors or any winning in lotteries, race, puzzle games, it can be charged with 30% tax. And coming to the donations, you charge 10%. On gifts, you charge 10%. And only the donor has to pay first. Along with the donation, he has to pay this 10% tax to the government. And the recipient, he will pay tax on this expenditure, on his expenditure, on all his items of expenditure as and when he spends. You have to effectively implement the rules. You have to collect the charges, avoid all fake dealings. This improves the revenue to the government at least 50% of what is the present collection will be the additional amount, the amount to be additionally collected. So friends, see, take one typical case of, say, a film artist, a hero or heroine, or a director, a music director, whoever it is, receiving, say, 50 crores or 100 crores per film. Let him take, no problem. But the producer has to pay, say, either 5% or 10% or 20%, depending on the category of services, in the form of GST at source. So along with that remuneration, he has to also remit this tax to the government. And another 5 or 10 or 20% or more, depending on the nature of expenditure, it will come to government as and when this artist spends this over a period of time. And this is a cycle. Same money may earn a tax as many times as it is spent by different recipients in this cycle. So individuals have to be relieved of maintaining the accounts or filing of returns. So whoever sells the item, the goods, the capital items or services, he has to maintain the accounts and he will file the returns. So out of 100, 95% at least are relieved of maintaining the accounts or filing of the ITR. So that botheration and tension is gone. And no tax rebates for the donations given to the trusts or educational institutions or the charitable institutions. If they really want to donate, let them do it along with this government tax, because many trusts, they come into existence for collecting the donations only. And in addition to this, following are a few suggestions to improve the revenue of the government and reduce the burden of a common man. One, you cut short the government. When I say you, it is government. It can be central or state or the local body. You cut short the government expenditure incurred towards the salary, tour, security, foreign visits, maintenance of the bungalows, courtesy, hospitality, and so on. You reduce the number of government representatives both at the center and states, including the staff. Wind up the unproductive organizations. Levy Heavy penalties on government authorities not completing the projects on time. You curtail the awards and rewards because it is again public money. And you impose strict vigilance on the progress of work in any government institution. Give opportunity for the deserving candidates to work on contract without any age restriction in government departments on contract so that the expertise is with you. You avoid all cheap and popular vote catching projects. Make voting compulsory, otherwise you withdraw government benefits and you charge heavy penalties like say 10,000 per individual for not voting, then everybody will come stand in the queue and he will vote. Government should not expand its activities into the private domains. They should only focus on the important and essential services like maintaining law and order, internal and external security, defense, finances of the country, and a few other activities. On education and medical services operated by the private, there has to be a strict control, and you should not allow this to become a lucrative business and control the medical mafia. The VVIP's visits to open a private medical college, a private engineering college, a temple, a trust, a private enterprise, costing crores of rupees to the government towards their travel by independent aircrafts, towards security, etc., should always be avoided. You make the legal system simple and fast moving, and any final decision of the court on a case, it should be out within 6 months. Politics should be a passion and not a profession. Don't come to politics to make money and enjoy the powers with hundreds of people and privileges around you. Come here only if you have to serve the humanity. Friends, the governments, any government, state or central, it has to encourage the people to learn, work and earn. Don't ever make them lazy with free schemes like the Adarsh Vivah Yojan, Janani Surakshana Yojan, the Anna Bhagya, Kshira Bhagya, Tali Bhagya, Akhi Bhagya, Gruhalakshmi Bhagya, Jyoti Bhagya, Bas Bhagya and so on, because it is all public money. Earning and learning, it should be made compulsory. It should not be an option. Learning and earning should not be an option, it should be made compulsory because the country is already in heavy debts. So friends, with this, I close this. Thank you very much. And if you have any comments, you are free to pass on them. Thank you.